There we go. So here's Tom Williams for you.
Thank you very much, Rita. Yeah, hi, it's Tom Williams here. Thank you for all coming in, listening. We appreciate that. Oh, I certainly do. And we look forward to talking to you, as you probably realize. Now, what we've got up on the screen, of course, is the S&P 500 cash market. It's up to date to yesterday. That's Thursday, because we have to wait for the end of the day before we get today's data up. Right. Now, it's not been an easy market to read. It's easy in hindsight, of course. Usual story. We do have at the moment on this chart a sign of weakness. There it is.
Supply coming in.
And the information box, or the dialog box, it tells us that some supply has entered the market. Right? So you obviously would not be interested in going long yesterday until the market was clear. However, the market is devious. It is cunning. It does seem to do the opposite to what your so-called gut feeling tells you. And but that's how the market works. We have to get our head around that. And of course, the reason is that you're being constantly bombarded by incorrect information. They may be telling you the truth as far as the news is concerned, but it's always directed at the powerful stock market. And they will whipsaw the market up or down on that news, usually to your disadvantage. And that's why they like you to listen to the news. That's why they always tell you well in advance what time the news is coming out. Next Monday or next Tuesday or next Wednesday. And you've got to seriously ask yourself, knowing that they're not there to help you in any way, all they're interested in is your money, you have to ask yourself, why do they appear to be so cooperative in letting you know what the news is at 1:30 or 2 or 2:30 or whatever? And of course, if you sit down quietly and think about it, right, you would do the same thing if you could get away with it. If you're a professional trader or so-called smart money, right, and you could bring out news and whipsaw the prices around that news, and there's no pressure on you because you know what's going on. There's only pressure on the trader that's got no idea what's going on. And as they whipsaw the market, of course, they catch all the stops, mislead traders, traders that are short, panic, and may go long, or they close out and say, oh, I've missed that move now, and so on and so on. It goes on and on. But that definitely goes on. But listen to the news by all means, but be fully aware that in the background, this will be going on, because that's how they operate. And if it's human beings, and they're there to make money, they're not interested in your welfare, which is quite understandable. You or I, we would all do the same thing if we could, or we had the opportunity. Right, so that's yesterday. There was a sign of weakness there. However, on saying that, all these bars in the background here, we're slowly drifting up, look, are actually what we call strong bars. And some of them are so strong, they've actually brought up signals, look. There's one here which is a test, look. A test. is when you see a red bar, it's been marked down, the spread is narrow, it's closed in the middle or high, and the volume is low. That means that as they mark it down, there's no professional following. Hence the low volume, low activity. Remember, volume is activity. So if you look at these bars, they're actually strong, what we call strong bars. But of course there's some weak bars in there as well. So it's a mixture. It's like a fruit cake there. Now, as far as the computer's concerned, as we know now, this markup was done. As a matter of fact, when they mark that up like that, I think I was chatting to Rita here and I said, oh, it looks like an artificial markup. But they knew it was coming because look.
Check out.
Right? The computer dialog box. Don't forget these signals were probably made 10, even 15 years ago. And the only thing that's been changed, the dialog boxes were re-edited by Philip Tristan. But using more or less the same text, the same inference there. But so they knew, right, there was something coming out. Now, it's called a shakeout because to get a shakeout, you have to have a down move of some sort going on. And we could clearly see these red bars are down. And when you get this plummeting down like this into what I call fresh low ground, in other words, there's nothing down here to the left, you can rely on the volume going on. And here we see the volume is actually low. And that's why we call it a shakeout. It's been marked down, closing near the high, and they're doing that because they know that Congress is going to get their financial studies right. And there's a lot of publicity around that. Will they or won't they, and so on and so on. Okay, now they know what the result's going to be. Right, so they have a shakeout. Next bar is down, look, also on low volume. So this is confirming the strength on that bar. Right, now the next bar is up, look, on the back of the shakeout, and the fact is there's no selling pressure on that last bar. And then, of course, the news comes out about Congress has rubber stamped where they're going to handle the economy, and I think it was called Cliff Edge, which is another dramatic statement to make you pay attention. You know, Cliff Edge stuff, all this. Okay, so, but anyway, right, now, so they mark it up. Now, because of that shakeout in the background and that markup, the market starts to move more or less sideways. And the very first bar, look, is down. And look, the volume is low. So that says, right, okay, I am strong looking despite this, but the volume's not all that high. So, but down, and the next bar's up, look. But lo and behold, that's a bit on no demand. So this is what we call strong or weak bars. So when it's marked down and there's no selling pressure, that's a strong bar. Doesn't mean say you're going up to heaven right then. And then the next bar up responding to that. But because they want to mark it sideways, or they're not sure what's going on, there's no demand, look. And then next bar's down, look. And again, the volume is low, showing there's still no selling pressure. Definitely not, because look, that's a down bar. The spread is narrow and it's closed in the middle. And the activity is low. There's a yellow box there too. What's the yellow box say?
No supply.
No supply. That's right, look. They are. So even that's there to remind you. So you know the market's not going to collapse at that moment. So I'm saying that, next bar, look, a slight markdown. Again, there's not a low selling pressure. Again, it's closed in the middle. Again, the spread is narrow. And all this is going on because there's not a lot of selling there. And don't forget, you've got the shakeout in the background after a down move. This markup, look, on the so-called good news about not falling over the edge of the cliff or something similar to that. So when you look at these bars, you know that the market's not going to fall at that moment. Right? Now, next bar, you get up, look. Again, the activity is quite low. Again, the spread is narrow. So that means there's no demand on that bar. And this is the reason why it's going sideways. You get strength, potential weakness. Even so, it's marked up again, look. But again, there's a little bit of supply, but nothing that's going to change the balance of supply and demand. Right, so the market then follows. Again, you've got a down bar, look. Narrow spread, low volumes, even closed near the high, look. So immediately you know the market's not going to fall at that moment. And the next bar is down, and even that's come up with a sign of strength. A test. Now, a test is testing the amount of supply that might be present. That's what they're doing, and that's what professional money needs to know. There's no bogeyman that's come out and is lurking around the corner ready to dump massive amounts of shares onto you if you happen to be long. Right, so the test, market goes up, look, on these tests. Until yesterday, look. Now this is the first, and it's not a serious sign of weakness, look. It's been marked up. There is a signal.
Supply coming in.
Supply coming in. Rita's in the background reading the... we don't hold any secrets. We don't claim to have any secrets. What we claim is that all the information is there in front of you. And as I've always said, if you get people with websites telling you they have a secret, then you know you're being groomed for a con. Because there aren't any secrets in the stock market. There's too many clever people out there backed with money. And they associate with other professionals as well. And believe me, they have to get it right, otherwise they're not in business. But study those dialog boxes. So we've actually now, yesterday, got a little bit of weakness. But we've still been drifting up. There are a lot of strong bars in there on that sideways, which is quite difficult to analyze. Incidentally, it's snowing heavily here in Worthing, England. The trouble with England, we're not used to snow, and every time there's a foot or so of snow, the whole country seems to stop. And we're all sliding around, and trains are delayed, and so on and so on. It's just how it goes. We're almost lucky to be talking to you. Rita left her home.
Skated here.
What?
I skated here.
Yeah. She said she almost skated here. And so we thank Rita very, very much for this. I've had problems recently with my internet. Now, whether it's due to the bad weather, I don't know. But it seems to be working, touch wood, at the moment. But we had trouble with the internet, and what with Christmas and one thing and another, it was a fairly difficult time for us to give you really, really good information. But we hopefully will overcome all that. and give you all the information, well, I can anyway. So that was yesterday, Thursday. Now, are there any questions about that chart before we look at what's actually happened today? Risa's looking into her screen.
We've got a question on the 30-minute chart.
Question, we'll look at the 30-minute in a moment. Nothing else?
Yet, anyway, no.
Eh?
Not on this one, no.
Okay, good. Put an hour chart up. We'll put an hour chart up to what's happened today.
And then we've got to go to the 30-minute.
Now, that's when the American market opened. That sudden surge in volume, look, would be when the Americans get going, look. Fair enough. We know that. Now, we know that surge of volume because we use relative volume. And it looks high, and the computer looks at it as high because it's comparing its volume there with the volume of Globex overnight. And obviously the two don't match up, but you soon get used to that because you know the volume's going to surge when the American markets open. Now, so we look at this chart. Now, don't forget, right, we've noted the daily chart for yesterday, and we noticed there was some weakness appeared. And that's why the daily chart, end of day, you should really always look at that first. It's really like if you want to travel from A to B, probably the first thing you want to look at is a map. Right? Well, may not necessarily be now these days with SatNav and all these gadgets coming online. But we like to look at the end of day just to get some idea. Now, lo and behold, this is now a chart, right?
Yeah.
Now back here, look. It's surged up.
That one's got a signal.
What's that? No demand.
Well, it's got a yellow box. Hang on.
We've got a yellow box up here.
No demand.
No demand. So that's a warning. Don't forget, we anticipated some sort of down move because of looking at the daily chart. And that gave us a warning signal. So the professional money will be aware of that. And that's why on that up bar, look, there's little or no demand. It's not easy to see because it's Globex. But still, the principle's there, it's still working. So up it goes. It's been marked up, right? There's little or no demand from professional money, but that's all right. They're marking it up. And they mark it up again. Right? And again, that's no demand. And then that's the top of the market as today. Right? Well, then. Okay, so the market moves sideways, look, or falls slightly. And then they have this classic sign of weakness. An upthrust.
Supply coming in, that says.
Well, this box says, the dialog box says supply coming in, right, which is true. But we know, yes, it's supply there, the computer thinks it's supply, but we know it's a crafty upthrust. They know the weakness is there. They've read the market as yesterday, the same as we have. They can see there's no demand here. But there's strength in that market. That's the problem, right? But they want to mislead you as possible just before the opening, look. They mark it up, look. Catch stops, misleads many people as possible, right? And then it comes off. The American market's open, and there's quite a few signs of strength have come in.
Potential stopping volume.
Yeah, but, yes, well, now, yes, potential stopping volume, that may not be totally correct because Globex has now been turned off and the American markets per trade. But it certainly looks like some sort of stopping volume there, doesn't it? You've got very, very high volume. The market's plummeted down into fresh slow ground. It's closed in the top of the bottom quarter, look. What's that one say, Reed? Who? Shakeout. Right, and that bar there has caused this market to rally like that. But whether it's fallen enough, because professional money, to make money, they have to have movements. Now we know there's a lot of strength in the background. Some of it's a bit subtle, admittedly, but you'll soon get your head around if you keep looking at it and visualizing supply and demand in the background and looking at that end of day for yesterday, warning us. And somebody wanted to look at the 30-minute chart. Can you put that up, Reed? Is there any questions?
We've got one from Chris.
Chris asks, why does the fact the volume is Globex make it not easy to see?
What was that?
Why does the fact the volume is Globex make it not easy to see?
Well, it's computer, isn't it? The computer is still looking at the volume, and if you look down at the bottom there, it comes up with a fairly accurate description of the volume. Volume high, look there. Right, and even if you go way to the background, it'll still read the volume. Volume low, look. Still gives you the spread. But of course, it's Globex. It's difficult to read when it's being shoved out of the way by the huge volume that kicks in when the American markets open. But it's still there. And don't forget, it's called volume spread analysis. So you could often go a lot of information in price spread. And if the volume's available for you to look at, all well and good. But it's well worth the patience in trying to get your head around this. Because once you learn to read these charts, you'll have that information with you for the rest of your life. And you will never, ever regret it. I can assure you that. And that will be, because the markets work the same way as they always have done. It works on the balance of supply and demand.
Okay, poor James has been waiting since the start of the webinar on the 30-minute chart. Has a question. On the 30-minute ES this morning, I see a bag holding signal that seems not to work out. I see too little volume and the bar doesn't appear to be narrow enough. Please comment. Well, Tom hasn't got a bag holding signal. Bag holding signal seems not to work out. What bar do you mean, James? Because we... hang on, I'll just have to explain to Tom as well. Hang on. Yeah, we haven't got anything. It depends, of course, always on who you're getting your data from. Another thing. Look, 5 bars back from now. Sorry. 1, 2, 3, 4. Yep, this is the 30-minute. You mean which one, James? Just waiting to see the one with the signal. This one. Oh yeah, bag holding. It says bag holding. Okay, Tom, I'm just going to explain. I'm just going to explain to Tom. Hang on.
So he's seen this bag holding signal. That's bag holding, it says. It seems not, yeah, and it says bag holding. It seems not to work out. It says, I see too little volume and the bar doesn't appear to be narrow enough. Please, could you comment? That one. It doesn't look like, because it doesn't look like one to me, actually.
No, actually, thank you for your observation. Don't forget, you're looking at a dumb computer, right? And the variation in the data is so great that at times it will not give you a dead accurate analysis. I don't have available a programmer, and I haven't had one for a long time. So there's quite a few things, like this, for example, that's not correct, which I know I could correct if I had a programmer available. However, it is a down bar, but it's not bag holding as we would describe it, because the volume is too low, right? So if you had a programmer and they look at the code, it would definitely won't mention you've got to have ultra high volume. It's quite a rare signal, but a very, very good one if it occurs correctly. But bag holding is when you've seen a substantial down move in the market already, right? And then some horrific news comes out, potentially, it's so bad that they can mark it down on that, frighten everybody as much as possible. But at the end of the day, when you look at that bar, it's narrow. It's the exact opposite to what we call end of a rising market. This would be the end of a falling market. And you know that because it's been marked down. There'd be, after a substantial down move, the spread will be narrow. It will have dipped down into fresh low ground. But the main thing is the volume will be very high and you'll have some strength in the background. And a down move. You can only get bag holding when you've had a substantial down move behind you. And that will be a guaranteed bottom. But on saying that, there was a lack of selling there. But there's definitely some support there, look, on that bar.
There's a yellow box. Do you want me to click on
What's the yellow box say, Rita?
Test after a shakeout. But the next bar was down, wasn't it?
Yeah, well, that'd be on low volume, which it was, look. So in a way, there was strength there, but the computer's just read it wrong. But there is some strength there because it's been marked down, and there's no selling pressure, little or no selling pressure. And some supply buying came in on that black bar, look. And we would visualize that there's some strength in the background. And it's Friday, so always be cautious about a Friday, because they love to mislead as many people as possible on a Friday, so that all that speculation will appear in the Sunday newspapers, on the money programs, and that will ripple through the trading fraternity. But it won't ripple through the professional monies because they know what's going on. But they will do that, so be careful, always be careful on a Friday.
Jean says the bag holding bar on your chart shows as a signal SOS. Sorry, hang on, Tom. I'm just clicking on this. Well, ours says SOS 36. Oh, for you, for Jean, you've got no supply signal. Yeah. Okay. Right. There was actually a question on that daily chart we ought to clear up, Tom, that came through after we'd flicked over. Maybe I should wait longer in future. Carlos would like to know, looking at this daily chart, Tom, where was a good chance to get in?
Well, the thing is, I know it sounds unreasonable, but the trouble is that when you look at these charts, imagine you're back here, look, okay, and the market's been falling, look, right, here's the red bars, it's falling, falling, falling. The news is probably very bad, and so on and so on. Now, although we've got an indication that came up, look, you'll find that why a lot of people have a job to get in on these low points is because they're not ready mentally for it. They don't want to suddenly buck the trend. They don't want to suddenly go against everybody else, which I'm afraid you have to if you want to make money, serious money. And that's what's good about a computer. It's not, doesn't have any emotions, doesn't have your emotions. It says, right, okay, you told me that when the market falls like this, etc., right, throw up a signal. And I'm doing that. That's about the extent of its thinking. It just shows you that these principles are accurate. But you've got to get over the hurdle then of suddenly you're in this bearish mode, and suddenly there's a potential turnaround. You think, ooh, I wonder if that's right. And even here with the next bar down, look, you say, oh, well, there you are. It's not right, look. And then suddenly it turns around. And the market does that deliberately. And to become a professional scalper, right, which is what we're really talking about, you've got to get your head around that. And that's I can really say, all I can really say. Right, so that's the first opportunity you should have taken. Then this is obvious, fairly obvious sign of strength here. And then you see there's a down bar, look, no response. If that was weakness, that would probably go up on no demand, or you'd have an upthrust or something. But it's come off slightly, look, narrow spread. There's no selling pressure at all. You could have possibly gone long there. But if you did nothing, you can't be blamed, because really to be successful, you've got to get down here on these low points. And that's difficult because you are not geared up. You here are the weak link. When that comes up, you think, oh, I wonder if that's right. Yeah, it's probably one bad one, look. And so then you talk yourself out of it, especially when next bar's down, look. But if you look at the volume and the amount of activities going on, look, and you knew that they had to solve this money problem in America, you could put two and two together very quickly and you'll go long up. But these bars going up on these wide spreads, closing on the highs, not by accident. That's done deliberately. We call they gotcha bars, as Gabby would say. In other words, if you hesitate here and then it shoots up like anything, oh, I've missed that move, look. And there you are out in the cold. You missed it, especially when that bar comes up. But you could have put two and two together down here.
Is that a test, Carl? wants to know. That there.
Well, it is, isn't it? We got signs of strength here, which we've seen. Next bar is down, look, and the activity very low. That is a test of that. And you knew that the Congress had to pass these laws, and that's why they call this cliff edge, this move up. So you could have anticipated that. Okay.
Okay, Thomas says snow is nature's way of telling you to take a break. Yep, it's true. You look out there, you see that beautiful... I've just got to explain to Tom. Thomas is saying snow is nature's way of telling you to take a break.
Snow.
Yeah. Sorry, I'm having to shout at Tom at the moment. Trying not to shout at you all as well. It is. Well, it does. It makes you look out there at it. But unfortunately, if you've got things to do. Okay. Right. Mark would like us to look at the 5-minute. And while we're doing that, we've got a question from Chris. I have a question about the law of cause and effect. Can you please give some examples of cause other than buying and selling climaxes? Did you get that? And I'll go over to that 5-minute chart.
Yeah, go 5 minutes. Right. Cause and effect. Well, there'll always be a cause if there's an effect. And now we saw yesterday, look, on that daily chart, we saw there was definitely, it's come up with an automatic signal as well. So there's the cause, and today's fall is the result of that, look. So there's the cause yesterday, and today's the effect. Now, I've never really specialized too much in that terminology, but Philip Friston is very, very clever at all that. If you write into the VSA club, I'm sure he'd be delighted to give you a detailed answer to that. And even Gavin can do that. But there's always, for any effect, you have to have a cause. Has to be a reason. And that's basically what we're looking at. But don't get tied down too much. Don't start getting too clever. You need to read the chart, and then as you learn to read the chart, where supply and demand, how it works, then your skill as a trader has to kick in. And that's another hurdle that you've got to go through. Because then, once you start really trading, then your emotions will also come in. And that would be a big hurdle for you, I'm afraid. And that was the original idea, I certainly thought. Now, if I get a program to put these principles, so I know how the market works, then surely the computer doesn't apply any logic to it, doesn't apply any feeling, gut feeling, nothing. Just does what you tell it to do. And but despite that, people will get their judgment shrouded by emotions. What's this, 5 minutes?
Yeah. I'll get Tom to comment on this 5-minute in a second. But yeah, when Tom talks about emotions, and actually there's a little thing here from Eleni, one cannot be a nervous Nelly if one expects to become a trader. And that is true, because you know, often you'll see a test or something, and the following bar then starts to fall. And if you're a nervous person and you're not going in on a definite thing, I mean, they do things to scare you. That's about it. So the way to, I mean, it's not, I don't think, well, for myself, I can't override my emotions totally, but the one thing that works is sticking to your trading plan and only going in the market on definite principles, because if you're not sure yourself, you will be scared, because they do things to make you scared. They'll do shakeouts and all sorts of things. So that's one way of dealing with your emotions, but we can't. They're automatic. They were put there to protect us when we were out hunting. Right, there's a question here from Edmund, Tom.
Yeah.
How do you define low volume? Is it indicated by the pink bar, or is it determined by volume bar underneath the average line? And that's the 5-minute chart.
How do we determine volume? Right. How do we determine how much activity is taking place? Represented by the vertical line at the bottom. Volume is activity. That's all it is. Right. And it's looking at the previous 10 bars. The computer is. And the volume that's on that bar that you're looking at, right, the computer's figuring out relatively, is that high or low or average for the previous 10 bars? And that's what it's looking at. And but when really high volume comes in, then you have to sit up and be alert.
But he wants to know, how are you kind of reading it? Are you going by the pink, or if it's below the average? How do you...
Can you answer that?
Well, did you talk about relative volume?
Yeah, relative volume. See, that pink and everything put in there, I think Gavin had put in there. It looks nice. But I never look at that, quite honest. If you want the truth. I look at the vertical line at the bottom, and you can clearly see if it's high, low, or average. But that pink business, you see, we don't use or don't need to use any formulas of any sort. Therefore, that's why we don't use the open in any way, because all the open is good for is giving you a formula, information for your formula to work. But we don't need that. But don't worry, it'll all come to you gradually. And once you get a breakthrough, you'll be so happy, and you will know more about the market than most people on the face of this earth. And I say that seriously. Now, why that is so, I've got no idea, to be quite honest. And I think it's because computers are relatively young. I mean, this program here, I started work on this with a programmer when IBM and came in with the first desktop computer. And I remember one of the directors of IBM said, "What on earth is a housewife got to do with this computer sitting on her table in the kitchen?" And I remember that. And that's why they lost interest, and Bill Gates got hold of it. And that's why.
This is a 5-minute. Mark wants you to comment on this chart. The
5 minutes.
I've put more bars up, but tell me if you want me to put less. And there's a question on this bar here. Do you want me to put less bars?
Five minutes, is it?
Yeah. Tell me when you want less bars.
All right.
Ooh, it's going up.
Now, I haven't looked at this for a week, 5-minute chart. However, I know the principle will still be working. There's just before the up move, look. Test. Now, remember what a test is? A test is when they mark the market down. It's marked down, right, with strength in the background, because they want to know if there are any sellers trying to dump on them, dump their holdings. So when they mark it down like that, and the volume is relatively low, which it is, that's high volume there, but this is low volume on that test, look. It means that the professional money are not interested in the downside at that moment. They would see that. They know there's strength in the background, and that's why they have this widespread up, because they want to trap or stop as many traders as possible getting in on the move. And the best way to do that is these widespreads up close near the high. And that's not by accident, and it's not by news, it's done deliberately. And that would be done on the back of this test. Don't forget, it's 5 minutes. So 10 minutes after that, up they go, look. And it's followed by another test here, look. Although it's got no signal on it, I can see it's a test. And the reason it's a test, they will test these sudden up moves because they're also nervous. And don't forget, you're trying to get through an old high here. Well, not an old high, but a area of resistance, we call this. And there's sudden down move, look. But this is obviously here. Down here, this would be
quite high volume here.
Yeah, is that volume on down bar?
Yeah.
Yeah, I thought so. So look, 5 minutes, we've got a down bar, and look at that massive volume coming in. Right, but there's some supply in the market at the moment, and that's why it's drifted off, and they want to test. And they mark it down, look. It's closed well off the low. Right, and that's why this showed, as far as professional money is concerned, they know demand is greater than supply at that moment. They have another test just here, as we know, to make sure. They mark it up deliberately 10 minutes later, but it's tested as well, look. There. And that's why it's gone up like that. To stop this up move now, you're going to see high volume on that bar. If it keeps testing, it means it wants to go up. We'll have to follow that and see what happens.
Aaron says, end of a rising market signal just appeared. Just saying, pointing at this signal here, Tom, says end of a rising market. Well, you have to use your own judgment to some extent. Yeah, that's what it says there. So you have to see what the market does on that. It's that one there, Tom. Do you want less bars? And it's so often Tom says that high volume is acceptable often when it's breaking through a previous area of resistance, that it requires that. So when it's doing that, be wary of high volume. It's not necessarily the change of thing.
Well, there you are, you see. I always say to Gavin, look, ignore the signals at your peril. Because sometimes you get people like Gavin that they're quite experienced at it. And I've heard some of them say, oh, I don't need the signals. And they're actually going more or less against the signal, some people. Now, that's a sign of weakness, right? Now, you might think, oh, well, it doesn't look weak, right? But you ignore these signals at your peril. That's all I can say. I personally would never want to go long with a signal like that up there, unless it was, but you have to read the market as it unfolds. Okay.
This bar here, Tom, there, that test there, or whatever we called it. Yeah, it is test. Andrew Woods would like to know, would you go long on that,
Yes.
or would you wait for the diamond system to change?
I personally, Rita's sitting here, she trades, she'd be in on it like a shot. Be quite honest, we tend to be a little bit more oriented to the short side because if you get that right, you can make a lot of money with very little risk. But if Rita and I, or I'm trading here, and I've got somebody to operate my dome for me, you get in on that straight away because you've got strength in the background, be it only 5 minutes. And so you get in on that, definitely. What was the rest of the question?
Or would you wait for the diamonds to change?
Ah, yes.
Before you do?
Now that diamond system, to be quite honest, I don't follow. It's just a clever moving average, as far as I'm concerned. I think to a point Gavin has been slightly misled in America because top trader will say, well, look, it's all very well, you know, I don't want the top and I don't want the bottom, which is incorrect to start with. I just want to bet in the middle. That's a favorite saying. That's the people that can't read the market properly. But I think Gavin has been slightly pushed off the tracks a bit by that. But saying that, that diamond system is quite good. It's very good for stock trading and longer term reading of the daily chart. Okay.
Carlos is saying, would you go short now on that chart after the end of a rising market? I'm just going to make a few comments myself, actually, because something I've learnt is, through a lot of pain, is that you want to see evidence, or you want to see confirmation. You want to see confirmation of the, you know, if you see stopping volume at the bottom,
Yeah.
and you see a test there, now you can go in on that, but an even more certain place would be this bar here, because yeah, it has changed. You know that the market is now moving up, and there's a test to confirm it. And there are days when the market, no matter what you want to think, it's just going to keep on going up. Now, yesterday was a day like that. Yesterday, throughout the day, there was signs of weakness might come up, you know, up here. But the thing was, they might be momentary, but the thing just kept on going up. And if you see a sign like that, you go in there, you've got to be aware that it is a bit of a chance, because looking back, in fact, I was following the Dow. The day before yesterday was a test on the daily chart. To me, it looked like it was a low volume down bar. And therefore, yesterday was going to be possibly an up day. So bear that in mind. That's where the strength comes in. That's the main strength in the higher time frames. You always check them first, and then you want proof of that when you're looking down into the lower time frames. So bear in mind that you might see a sign of weakness in a very low time frame, but it might not last for very long. The general move is up. And if you try to fight the trend, then you're risking a bit. But when the market does start to turn around a little bit, you want to see how the market reacts upon bars like this, or bars like this. Now look, it has gone down. Now, if I saw a sign of weakness and yes, the market's coming down, I want to see proof like a no demand bar here, and then that's a definite sign that it's going to go down a little bit further. But bear in mind the strength is in the higher time frames is more powerful than what's going in the lower time. And Eleni says, without confirmation, we are guessing. Well, yes, you must see what the market does on that. So, yeah, you can, I mean, everybody has a different style of trading. Some people are aggressive. Through a great deal of pain that I've suffered, I'm now quite careful. And it all depends on how many contracts you're trading. All sorts of things affect your confidence levels. And I found that I might you find something that works, and then I might start trading higher amounts. My confidence level, it's like a chemistry in your brain. Psychology is chemistry. And you add another variable, you add something else to it. It changes your emotions. So you must be aware, you need to develop your own trading style, what you are comfortable with, and find out what works for you. Because otherwise you build up a history of fear, and that's going to affect your future profits or losses or whatever. Yep, sorry, Tom's telling me hurry up, because we are actually running out of time. So, and there's do we have coffee charts was a question. Coffee? Yeah, I think we've got we're on here on the end of day we've got the continuous contracts. Have we? There's cotton, cocoa, corn. We haven't, Tom. Not coffee. Unless it's a different. What's the
It's definitely there somewhere.
Will it? Oh, coffee. Hang on. KC. I was looking under. Oh, crikey. So here you are, Tom. Could you comment on coffee? It's a daily chart. Do you want me to put it down to something small?
Well, leave it there for a second now. To be quite honest, I've never looked at coffee because I'm not really interested in coffee, but it's obviously been whipsawing a bit down, hasn't it? Look, the trend appears to be down. You could draw a trend line, Rita, from the high there, and the low. I like to have trend lines on my charts.
From where?
First two highs and the low.
Sorry. Hang on. I'm a bit cack-handed. There to there.
That's it, the first low. That's it. Now see how useful trend lines are? It kind of makes a bit of sense of something that looks really chaotic. You could clearly see the trend is down, or has been down. You here are oversold, vulnerable to an up move. Right, there's little or no really proper signals on this. But it's trying to be bullish because, see this bar here, look? It's a widespread up bar.
That one. That's...
Right. As it pushes through this top trend line. Now, that could be a sign of strength, although it's got sign of weakness on it. But it is overbought now. So it's vulnerable to come off. And if this bit here goes up on no demand, it will come off. Because, as I said before, you ignore the signals at your peril. Right? So you don't chase these markets. You've got to wait for opportunities like this down here. And I'm sure if you look at various time frames, there will be signals there. We don't have intraday, do we?
No.
Not on this, sorry. But if I was trading with Seriously, I would certainly have a live feed. But this here looks definitely like what Wyckoff called a springboard. That is there, look. But clearly, look, down. Now, look, those trend lines are accurate because look how the widespread ups it pushed up through it. Could you put less bars up, Rita?
Yeah, 20.
20, yeah. That's better. But look at this springboard here. As soon as you see that, there's no signals on this, but there will be on different time frames. And even there, look, that's a test. Test, look, and that's certainly a springboard, sign of strength.
So a question from Thomas, do you see it, do you say now that you believe it would be in an uptrend?
No.
No.
No, I would say it's overbought. And you would be pushing your luck if you bought that now, expecting an up move. Again, you see, you have to be geared up to get in on these commodities or stocks or whatever you're looking at, really when everybody else is fearful because you've got down moves behind you. But if this is on no demand here, or if it's up on no demand, right here, then that's not going anywhere. And that looks as if the downtrend is still in place. But you do have strength behind you. It's this springboard here, which is really another word for shakeout, look. There. And I don't have smaller time frames, but I'm sure if you had an hour or so on, you'd see all sorts of signals here. There is one signal there, look. That's pushing up through there. Put a KG chart up quickly on this. Now, this is what we call a KG chart. Now, I can't see it all that well, but I'm sure you can. But if we look back here, look, now I can tell you this, the first time I've ever looked at this. Right? So what makes us think that this is potentially bullish down here? Well, the secret lies in comparing the volume or activity on the various up moves or down moves. Now, I've never spoken to you about this before, but this is a very interesting part of VSA here. And so when we look where the cursor is, right, we have an up bar. And bullish volume is expanding volume on up bars while decreasing on down bars. So that's clearly, that down bar is clearly less than the up bar, look. So at that point, we know the market is more bullish than bearish. Why? Because the volume is telling us so. All right? Up. Right? Expanding volume on up bars while decreasing on down bars. Expanding volume on up bars. And this is the first bar that seems to be increased on down bar. And that's probably why we got this here in over to the right of our screen. So there is some supply hitting the market there. Up bar, down. It's still looking bullish though, look. Now, I've given you an idea there for you to study. But let's go to the leading edge of the chart. And we'll look at that principle here. Expanding volume on up bars, yes. Decreasing on down bars. Expanding volume on up bar while decreasing on down bars, compared to the previous bar, that is. Now, decreasing volume, this is the first time it looks weak, look. It's gone up, look, on low volume. This is the first time we've seen that. And now the principle has altered. Because now, as the bar falls, look, the volume is now increased, so that's bearish volume. That's suddenly switched there, look. All these other bars, the volume's expanding on up bars and decreasing on down bars. Now, right here, it's suddenly switched. It has become bearish at the moment. Increasing volume on down bar, decreasing on up bar. So that gives you a good indication of whether that's liable to go up or not. According to that volume we've just analyzed, it's weak at the moment. So that's something you can go home on and think about that. We have very rarely spoken about this, but it does work because I've had a program, it's been programmed in to a piece of software that I had 2 years ago. But for some reason or other, Gavin hasn't got around to giving it to you.
Okay, sorry everyone, but we have run out of time and we're being told to get a move on. So I'm sorry we couldn't answer all the questions. Pop them into the forum. And I know Philip Friston is often there. He can answer. And Tom will if we see a question when I'm next over. Question from David. What happened to the newsletter for last week? We had internet problems at Tom's and we had no data, so we couldn't do a newsletter, and it was off for quite a long time. Yeah, a week. And we had a bit of a blip yesterday as well, but we're all right now. So, okay. So, Tom, do you have anything more to say? No. Yep. Tom says thank you for listening, and we will, if internet's all right, be doing our newsletter.
We'll always do our best for you.
This weekend. Yes, we'll as long as we can. We'll do our best, and we'll be back next Friday as well. And thank you all for listening. See you next week. Bye bye.
Welcome to GoToWebinar, Web Events Made Easy.